so going back to that question about, perseverance, and in one of your videos about why traders fail, their expectations are so high when they start trading. They've been told, oh, you can make all this money trading, we're gonna, and then it's like, oh crap, this is a little harder than I thought. At what point do you say, okay, maybe trading isn't for me, but you still love trading? You still love the aspect. You still love the people, the traders. Does there come a point where you're just like, okay, this isn't for me? Or can you just keep moving forward and improving and get to where you want to be?
Well, the first part I want to talk about is really the expectations. I think it even affects me, because I get ahead of myself at expectations too. And a lot of times that's what'll cause a lot of my drawdowns. So I think it's not even just beginning traders. It's every trader along every single level gets to a point where if you have some success, you want to sustain it or increase it. And then your expectations change, or you think you should be making more in a certain environment and your expectations change. And then you get ahead of yourself and you end up, having these setbacks. And I think that one of the most popular tweets I ever put out was really talking about this, where I said, it's not that 90% of the traders fail because they can't make money. It's because they fail because they don't make as much money as they wanted. And that's the difference. I mean, I personally think that there is a very small number of people that can do this professionally, because number one, it's just very difficult, and it's not a business where as good as you get for one type of environment, that is sustainable through multiple environments and multiple years. So, I mean, my best year was 14 years ago. Does that mean I'm not better now?
Yeah.
No. I mean, if I had that same type of year again, then I think that I would make a lot more now. But it was just 2008 was just a year where everything just worked for me, because I was on top of everything.
Yeah.
So I look at that and I say, if I set myself to those expectations, I would still be chasing that. I mean, 2009 was my worst year. And it was because my expectations were set so high, even though the first 2 weeks of the year was the best 2 weeks of an opening year I ever had. So, and it ended up being my worst year. So I think that when it comes to trading, I think everyone has to just really reel it in and say, this business is not put 5, 10, 25, 50 grand in an account and you're going to make a living at it. I look at it now as like, it's you just have to grow your account. I think making it for a living is just so few people that are going to be able to do that, because if you need to keep drawing from your account, which I do recommend, and we can get into that, I do recommend drawing from your account, even if you don't need money. But I think it's just too much pressure, and the business just changes too much in order for you to have that kind of pressure on yourself to perform. So I think that for a lot of people out there that are newer, it's like, I look at it like this, is like, if you love to trade, I have faith that you can make money. I mean, I think the number is really high percentage. I think it's the opposite of what the failure rate is. I think 90% of the people can make money, but I don't think that 90% of the people can make a living. Yeah. That's the way I feel about it.
Yeah, I guess that could also be, where some person might need to make 200 grand a year. Somebody else may only need to make 60 or 70 grand a year. If your nut's really low, for me personally, I like to use it as a side income. Having multiple revenue streams in this day and age is huge to me. It's huge. My wife and I have a candle business, right? Poker. I've got a variety of, even tournament fishing. I don't want to rely on one thing because the pressure is so great trying to rely on one thing. So if I can just use trading or crypto, well, not recently, but as just an additional revenue stream, it takes a lot of the pressure off.
Yeah,
I mean, a lot of the pressure off.
I can't tell you how many guys I know that were, top-notch traders that really now just look at it and they're like, they can't make enough money to do this and live the way that they want to live. So
their lifestyle. Yeah.
So, and which is My career is just this totally different path. I started when I was so young. And then when I finally made money and it gave a bunch back, I just really reduced my expenses to where I could sustain it. But how many people are going to have that amount of time to be able to kind of go through that and hopefully get successful enough to make a bunch of money, then pay some stuff down, and then bring it in. And then maybe invest in other. I mean, there's just
Sure.
it's just
Sure.
I think it's a very difficult path to
Talk a little bit too about when you do make some money, right? When you do have a nice week. Me personally, I have taken money out of my account in the past, and that's the only thing that saved me. Typically, what I have done, my history, and we can kind of go into like how do we deal with drawdowns, is I'll do well. I'll get super confident. I think I can run the market, and guess what happens? Give it all back. Because I want to try and build it up, trade more contracts, make more money, right? The expectations start getting huge. Can you talk a little bit about taking money out, paying yourself, rewarding yourself for making good decisions?
Yeah, I think for me, anytime I go on a run, I always start taking some money out when it starts to stall. Once I start to lose, I'll start taking money out. So if I'm winning a lot in a row and I just create this, buffer from where I was, I'll just keep pressing because I need to be able to trade bigger and increase my risk during the times that it's going well. But the minute I start to struggle and lose, and I look at it, let's just say, an easy number, let's say you make, 10 grand just for everybody can, and you were like, you just gave back 4, right? You gave back 40% of it. You look at that, and say, wow, that's a big percentage back, but what do? I probably take out 3 and I leave 3 in, and I try to build that 3 back up to 10.
Well, then also too, you're not operating at such a higher level. You feel like, okay, wow, I made this money. I'm going to move up in contracts, right? So instead of trading more contracts, you take the money out, trade the same amount of contracts you were at that level that you're comfortable at, instead of trying to like all of a sudden, it's like for me in poker, I've done well in poker, but until I move up in stakes, the pressure gets more, the money's bigger, my decision-making changes. So I think we so want to move up in contracts so we make more money per trade, but we forget that pressure becomes exponential too because the money's bigger. So the decision-making gets a little harder.
Yeah, I'm always back and forth. Like, right now I'm trading smaller because I was in a drawdown and then eventually pulled out of it. And then I went right back in it again. I mean, and I'm just like, basically, I'm like the double top in a market right now. Like I can't get past that level, So I'm at this point, I'm just trading really small and just trying to like grind my way back to that high point. And I know a lot of people will say, you don't trade the money, you don't look at that, but the money represents where I'm really at. It tells me where I'm really at. So if I can't make X amount more, or if I'm trading bigger and I'm not able to hold those positions, or they're not working out for me on the end, I'm not ultimately making money. Well, then I have to realize that, and I have to just scale back. I mean, you have to really be present with what it is. I mean, I've been long pretty much every day, and I've barely made money. I mean, it's like I went home long Friday, I went home long the Russell and the NASDAQ opening range is the high of the day today.
Yeah.
I dumped like 90% of the positions because I'm like, I'm just not going to sit through this shit anymore. I mean, it's just crazy, So
I hear you.
I dumped them, and I'm like, you know what? I still have a trailer on because I bought them good last week. But it's like I look at it, every position I try to hold for a long period of time, it just keeps coming back. So I have to stay really, really small to withstand wanting to have that outlook of it. Because when I was holding full positions, it was just coming back so much that I'm like, wow, I have to cover them. Now I feel the pressure to get out.
Yeah.
So if you don't see that in the money, then I think you just have to be realistic about, where you really are. And I think the money does tell you that.
Yeah. I had a drawdown here recently and a few weeks, about a month ago or so ago. And, one of your posts, you talked about like literally getting away from the charts. My problem is, like in poker, if I had a drawdown, I just play through it. Just got to play through it. Well, in the charts, I feel like I do better. In fact, Valerie, who's here, took 2 weeks off, went on vacation, came back and just absolutely crushed it in session as a moderator, talking about her trades. And like, she had that. Valerie, are you here? See if Valerie
Yes, I'm here.
Can you talk a little bit, Valerie, about taking time away from the chart and literally not looking at charts for 2 weeks?
Yeah, I was traveling a bit, so I couldn't look at anything. So I came back and was just trying to go back to the normal trades that I like to take and try to see if I was remembering how to trade. And sure enough, when I was following what the plan was that I knew of, it was working out for me. So was able to see the charts pretty clear.
And yes, I think we don't want to get away from it though. The charts, right? We feel like, oh my gosh, I have to look at the charts. So what do you think about that, Deli? About literally, I am not going to look at charts.
First of all, Valerie, well done and nice to meet you. And I would say I take a lot of time away from the charts. I have a very active life outside of markets. You know, I'm always away. But when I'm here, I'm engaged, you know, and I'm ready. And I look at it like this, is that a lot of times I'll be chasing an idea when I'm just glued to the charts all the time. I'll be chasing an idea of like, I've just got to be long. I mean, I keep saying to myself, NASDAQ's going to 12,500. I've been saying it to myself for the last week and a half, and I really haven't capitalized on it because I was just so close to it. And then I would just get so big. And then just a couple of days when it broke back down, I was just giving back so much money, you know. And then Friday, I just had a really small position on. Of course, it was the day it ran, and I knew that. I said to myself, you know, it's funny. Like I knew that day was going to be big, but I actually punished myself by not adding to it because I said, if you do, you're just going to go right back into that bad habit. And that's this whole weekend. I took the weekend off, disconnected from it. And it's like I get the fresh perspective, and I go back and look and see why I got chopped up. So it's also about recognizing that I was too close to it, and then coming back and just calming yourself down, because you just get attached to an idea. And when you're at the charts all the time, sometimes you just can't get away from that idea. You know, you're just so like, I think we're going up. And then, you know, like a day like today, if I come in today stubborn, having a winner on over the weekend, you know, we come in up. If I come in today and I just start buying them aggressively, I get crushed. Yeah. Because, you know, I'm trading NASDAQ futures and options. It's like that little bit of a break this morning would have really laid me out. And because I saw his opening range was the high, I'm just like, boom, I hit the bid and just covered. Because I'm like, I got to get out now. I had options on and I had futures. Yeah. So I was like, okay, you know, but they were winners, but they were turning into could have been losers really, really fast. Yeah. You know, I didn't know. And I saw how far they had come down after I covered. I'm like, they got to get out, you know. And now I left a trailer. I got small enough to do it. But if I was in that same mode, going back to maybe last like Tuesday or Wednesday, I would have saw opening ranges the high, saw a little bit of a dip and said, you know what? I don't give a shit. I still think they're going higher. I would have bought them and I would have got smoked. Yeah. Yeah. So if you don't remove yourself from it, you never really truly get a clear, fresh perspective.
Love it. Love it. You know, we'll talk a little bit about journaling and track records. Okay. We call them a track record. Other people call it journaling. For me personally, when I do a track record or a journal and I write down every single live trade or sim trade I get into and I make notes on it, I do pretty good. Then what happens with me personally is I stop doing it when I do well. All of a sudden I stop writing down my trades. I stop, you know, and next thing I know, I'm in a drawdown. How important is it to literally track every trade you take and journal and put a journal in?
I think it depends on the person. Because I know some traders that never journal anything and just do phenomenal. Yeah. I know other traders that if they don't do it, there's similar situation what you're saying. Yeah. I wouldn't say it's black and white that I know the answer to this, but I will tell you this, that what journaling does is it keeps you present and it holds you accountable for your actions.
Nice.
Yeah. If you're at that place where you're not necessarily sure, you know, I would say, you're not necessarily sure how good you are. And I don't mean that in like a sense of like too wide of a perspective, just more or less like, you know, where am I at right now? Like how good am I trading, I should say. And a journal allows you to see where, you know, what your decision making was like in certain areas. So it allows you to see when you step back, you know, on the weekend and say, okay, go back to what I said about myself. I know why I got chopped up. I was in a big hurry for something to happen, and I'm
Mhm.
adding in times where I should be covering, especially in a market that's mostly been a bear market. When you're trading long, I'm adding into a rally. Like
Yeah.
my initial entry was great, but my second entry sucked.
Yeah.
So it's like, what am I doing wrong? So go back to Friday, like I said, if I didn't go back and reflect on why I'm adding or saw how I was adding into rallies versus just adding on the brakes and recognizing that it could come back because it's come back so many times. I was so fearful of missing the trade that I got so far ahead of myself that my position got too big, too far away from my stop.
Mhm.
So allowed me like the perspective of like today, look at if it starts to come back, it shows you in the morning. Like if opening range would have been the low of the day and I
Mhm.
had a winner on, I would have added. Okay. Opening 3 minutes was the high. It broke. VWAP went down. I looked across the board. Everything was going down. I had to get out.
Yeah.
But I don't recognize that because I'm just like I said, you get in that way where you're just like, I just keep buying it. And even though technically I've been right,
Mhm.
but when you look at what I've been doing, I'm not making money. So there's a disconnect there. So the journaling helps you, whether it is writing it, whether it is reviewing. So I don't write down a lot of stuff. I'll go back and just review, and I saw where I'm adding, and I'm looking at that chart, and I'm like, "You're an idiot."
What are
That's
you
not,
doing?
I mean, why are you
Yeah.
doing this? Because you're so convinced they're going 500 more points in the Nasdaq, and I was long the Russell too. I did the same thing there. That I was just in a hurry to make such a ton of money that it just crushed me, and now I'm just like kind of balancing myself back out. But you don't do that without review or journal.
Well, in one of your streams recently, um, I can't remember who it was, talked about that, and I think it was, or you know what, I think it was maybe Pax's Spaces, and they talked about the journaling can be so important because if you can look back and if you take out all your errors and all your dumb trades, you'd be surprised how much of a profitable trader you can be. So for me, I can look back and say, why did I take that trade? That was just dumb. That was just dumb. So I have this thing next to my desk that says, stop doing dumb shit, because I like to do dumb stuff. So it holds me accountable to where I can go back and look at it and say, okay, that was a dumb, man. Why did I do that? Otherwise, it's just another trade for me. But if I write it down, now it holds me accountable.
I think that finding entries is the easy part in this business. Trade management is where the challenge comes in.
Okay, and that was going to be exactly that's funny that you mentioned that, because, most of us here were raised on the ES to where scaling in and out and managing risk while you're scaling on the ES, you've got to have a pretty dang big account. Most of us started with $3,000 to $7,000 accounts, and trying to like add on scale on the ES. I mean, come on, it's impossible. You can't at $50 a point. But the beauty of the MES now is we can take a couple $1,000 account and learn how to scale. So do you have any tips on scaling in and out of the MES and how to manage that risk while scaling? And I know this could be a whole topic in itself. We could spend an hour and a half
whole topic in itself.
just doing that.
My point of view, so there's very different process between scaling in the ES, scaling in the NQ, and like the RTY. Now, when you go to the micros, there's some wiggle room there, but I think that the ES price matters so much more than the NASDAQ. So because I trade multi-day now, I try to. I'm really intraday to multi-day. Like I try to get into something. Like I go back to Friday, opening range low of the day, VWAP gets above 3 minute. Bollinger Bands are starting to close in on the daily. I'm like, that could really be the low. So I try to hold that trade and trail it as best I can. So I just keep adding now on breaks. I was adding on rallies, but like if I would have saw a break today back to a significant area and anchored VWAP off a low, I probably would have added. It didn't get quite far enough. But so you have to, number one, look at the market and time, right? So what is the market's personality? What is the time duration? So for the ES and the MES, in my experience, my ads are always very much in a much shorter range, a shorter time span. So like if my price holds right away in anything that I'm looking at in the ES or the MES, I'm more aggressive to add into that area, because if it's not working right away, or if it starts going through my price, I'll just get out, because it's liquid enough and the book is big enough to do that. So I'll look at it and, in this market, let's just say, a 5 handle is one price to me. So like, let's just say that you look at, a 5 handle. I don't know what level maybe you have. I can't see. Let me move this over just to see what you guys have there. Okay. So this morning you have those double lines. What is that? 95, 38, 95. You have a double line there. What is that?
Yeah.
For?
Yeah. That was from the taps here, where it was support and resistance. So I was kind of looking at that area as a spot to work. And I had this drawn out before, the price action came in. So I looked at this as a possible spot that we might have trouble getting through, basically. Perfect. So I had our fill on this way down. We trailed our stop on the way down on an a 30-second range trade out of opening bell. And so that was kind of our level there to say, okay, if it can't get through here, we probably want to be out of our longs.
This is a perfect example for me then, because let's just say that 38.95 is an area that I would look at and say, you said to me, I like this area. I'd say right now, overall, the trend is up because of what we've seen the last few days. Let's just say that that's what we would believe, right? I don't know what the 10-day is off the top of my head, but the 10-day would probably be a factor for me here. If we're above the 10-day and the daily Bollinger Bands are closing in, and I see that we're, I look at that level, I'd say 38.95. So I'd probably go like,
there's a Bollinger's too.
Yeah. So you see how they're coming in.
Yep.
And then the 10 days, I don't know where that is on there.
10 would be the chartreuse.
Got it.
Lime green one. That's the 10.
Lime green one. So, and then what time frame are you looking at? So that's
this will be a 5-minute chart, execution chart.
But the actual 10-day moving average doesn't matter at this point.
Okay.
That's a 10-period moving average for a 3-minute or 5-minute, right? So it's really a 50. Yeah. Okay. So I would say in that instance, I would give myself 5 points and I would just be in an aggressive click zone in there. So I would just section out 5 points of that based upon the environment. So if I said 95 held, I would say I can add up to, let's just say 97.5, and I'll add as low as maybe 92.5. So like in that area, once I saw initial reaction, I'm just clicking in. So my scales for the S&P specifically are going to be very quick into my boxed out range. Now the NASDAQ, that's probably going to be 50 points.
Yeah.
Because there's no way I'm going to look at the NASDAQ for 5 points and say,
no.
Doesn't matter.
Not when your average candlestick size is 25 or 30 points.
Yeah. So
yeah,
I'd probably be like, so for what I'd be looking at, I would widen it out and I would say, this is my area of entry, and I'll just click inside that box. So that's to me an important part of everything I do, is that I don't look at the price as a single price. I look at it as a boxed out area. That's why I use that area that you talked about there, because that's my range. That's my scale range. Yeah. Because I am most likely, the only way I'm going to add to that position, if I bought down there, first of all, I'd have 75% looking at that price action. It went down there, held, and it traded in there multiple times. I'd probably have 75% of my position on. The only way I would add to it now would be cover a portion of my position at, let's just say VWAP, if it went back up there, anchored from the open, and it started to come back down, just got to that area, maybe a double bottom held, and I saw a price hold, I would add that on as an additional position. And I would say, now I'm managing 2 positions that are both in the same direction. So I'd have that second add-on. I would say, now my stop will be basically, if we get back into that box area, I'll lose a little bit and I'll keep my other original position and I'll wait to see what happens. So I manage it as 2 positions. So I think that when you look at scales, to me, scales have to be always managed as 2 positions or 3 positions. That's what I even do, even for my NASDAQ and for the Russell. I don't trade S&P as much these days, but when I do that, I always manage that second position. So a lot of times that's why I'll break it off and I'll be like, I'm in micros and I'll buy some options. And then all of a sudden I'll look and say, what makes sense here? I try not to get too aggressive with a single position to where I'm adding to it. So now my average price is so much higher. Yeah. If I add up there, I will manage that additional one just from that place.
Got it. And I think we're more in the lines of, we're operating on single positions, honestly, and adding to single positions and getting out of those single positions. And I think that's just because of the level we're at and the coaching we've had hasn't been to those, managing multiple positions like that. So that might
It
be
is a
something we wanna
tricky,
look
that's
at.
a really
It's
advanced
tricky.
part.
Yeah.
Because in your mind, you have to say to yourself, this position I got on that works. Let's just say you bought the 95s, 97s today in the S&P. And, for me, I look at it and go, on that blip up rally, I'll take some off. But if it comes back down there and it's holding outside that boxed area, and I look around and say, this could be a relatively low, I'll start buying again. And that position, if that doesn't hold, I'll burn that out and I'll just go back to managing the original position, which will then I'll add to that position. And I know it's psychologically, that's probably difficult to understand, but to me, that's how you do get to the next level and you start to really hold winners for longer. And you also don't get yourself burned on, your ads.
Yeah.
Well, even less when I talked about me getting too aggressive with my ads, I was burning out of the ads I bought in bad places and keeping my core positions. But then the market's coming back down so far, I chewed up so much of my profit that I'm like, now this position could turn into a loser because I basically lost too much on the ad. So in my mind, I kind of am always going through that and knowing where I'm at with that.
Got it. So, so what I like to do now is talk with a few of our traders here. They've got some questions. Yeah, Travis. Travis is one of our main moderators. He and I do opening bell, and he's got a session, before opening bell, and we literally go through the charts. We also try and help other traders build a foundation of standard trades that one trade they can go to. Travis, you there, buddy?
Yes, sir. How's it going, Rob?
Good.
Mr. Crudele.
What's up, Travis?
How's it going?
You had a couple questions, Travis?
Yes, sir. So
Awesome.
FNL's goal from the beginning has been to be an accepting group for a lot of different types of traders, a melting pot, if you will, for different traders with different styles. We have anything from new traders to advanced traders to traders who may have studied indicators that even we might not know. People are always bringing new things on. So my question is, how do you go about coaching traders without bending them towards your own trading style? How do you support a trader that might be a different type of trader than yourself without trying to bend them and say, well, this is what I would have done here?
That's a great question. I think that's probably one of the most important questions that any trader has to ask themselves, and any coach that's coaching trader has to ask themselves about their process for coaching the trader, because my system and my strategy may not work for you at all. I think I put this tweet out even last night where I said, you could have a strategy that's 90% win rate, someone else and still lose money.
I read it this morning in session, your tweet
That's just reality. I mean, I sat next to people. I remember being around a lot of successful people and literally watching what they were doing and almost trying to execute exactly what they were doing at certain times, and I still lose money. So the key is, as a trader, forget about the coach, because the coach can only teach you what they know. They can also, any good coach can also help you get better at the things that they think your strengths are and try to reverse some of your weaknesses. But they can't implement a strategy into your mind unless it resonates with you. So the first thing you have to do as a trader is you have to look at it and say, what is my time frame? What is my market? How do I see that market? And you have to sit back and literally kind of identify that. And you can't do that right away. You need to listen to other people and see how they look at the markets and say, I like the way that is. This resonates with me, and from there, you start to build your ideas and indicators around that kind of, around that market, around that time frame. And then you're really developing your style at that point, versus you can't go the opposite way, right? So I think the beginning phases are watch, see, learn from other people, and then start to building your own. I figured out Bollinger Bands on my own. I started watching, like John Bollinger and obviously how to use Bollinger Bands. And I'm like, man, it's so weird because I use this completely different than the guy who created it. Williams percent R, all these other different indicators, to where I even know the people who created them. And I'm like, I don't really even use it the same way that they do. So I think that there's also that aspect of it, is like, how do you look at and use an indicator? Brian Shannon taught me about the VWAP. I didn't use the VWAP at all. I never used it. Brian and I have been friends for years. I watched a couple of his webinars. We did some presentations together, and I looked at it and I'm like, I kind of like what he's doing here with the anchored stuff. He was showing it how, remember the first time I really resonated with me is like something that happened with Nike news, and he anchored it to there, and he showed how eventually when, how the volumes stay below there, but once they were kind of changed, once that was kind of like forgotten, that news, and it held above that VWAP, he anchored it to the low, and it showed how the trend had changed. And I'm like, wow, I could implement that into mine. So that was something I learned from somebody else, and I anchor them in completely different spots than maybe he does. So I think in a roundabout way, you got to look at it like this: is like there's a lot of introspection that goes on with you. You have to go around and look and learn from other people, and then you have to pull it together and kind of put the pieces together. And then a good coach or a mentor will basically say, in my experience, the best ones are the ones that help you get better at the way that you see the market. I think that's where they come in, and they might have some other things to add and say, hey, if you're struggling with this look, add a confirmation there. Maybe this indicator works. I think that's the only way I've seen success in the best prop shops I know, unless they're trading a proprietary system where it is just like, I go in there, and I mean, I was in a stock room one time that my buddy ran, and he must have had, I don't know, 100 traders, let's say 100 traders. And they were all trading the same thing. They call it like, Lululemon, call this out. There'd be groups of them that would be trading, and they were all groups, and they're trading the same, almost exact style and way. Execution would be a little bit different amongst the group, but they all had that same type of thinking. Now that's because they're all trading that money that's not theirs. So they're basically like trying to take advantage of a stock using multiple different traders. But the same reason why they're trading Lulu or they're trading, Amazon was the same way. That for futures markets, it's a little different because most of us are trading the same market every day. We're not looking, we're not saying, oh, this setup is happening, in gold that we like to see in S&P, and we're not hopping to gold. I mean, it doesn't really happen often. So hopefully I helped you with that, Travis.
Yeah, absolutely. Thank you.
Not an easy question to answer.
No, one of our favorite things to preach, if you will, is repeatable patterns in trading. And I like to ask people, like, if you had a great day today, maybe somebody came to me and they said, I killed it today. It's like, well, if today showed up tomorrow, same exact price action, would you take the same trades, or would you take similar trades, or might you not even know if you'd be positive again or all, depending on the day in your own zone?
Yeah.
I think having that
thank you.
repeatable aspect. Yeah, the repeatable aspect is something that we're really trying to stress. Because if you don't have a trade that's repeatable, in my opinion, I think you just starts clicking buttons, because you need to get familiar enough with the market and how the market's moving and identify the zone that you're in and the market you're in. And do you see that trade? If you don't see that trade, well, for me personally, I just don't take a trade. If I don't see my setup. So I've got 3 setups I look for. If I don't see one of those setups, I don't take a trade. I have to stay out. And that's hard, because if I feel like I'm sitting at my desk in front of my computer with my mouse in my hand, why am I not in a trade?
Well, remember what technicals are. Technicals are proof of your idea. I mean, the greatest macro traders I know still use technicals, and they use them to prove their idea. I mean, if you think that interest rates are going to keep going up, because the Fed's going to keep increasing rates, and you go and start trading 10-year treasuries, or you're trading ultras or micros, whatever it is, the only way for you to manage that idea is technicals, because who knows what can happen. So you have to have the technicals allow the ideas to be managed.
Mm-hmm. So, hey, Titus, you here, buddy?
Yes, I am.
Perfect.
Good morning, Anthony.
Good morning.
Titus is one of our traders that's doing a lot with the fib levels right now, and he is really doing some cool back testing stuff. So, Titus, you may want to ask a little bit about that. Get Deli's opinion on that. But I know you had another question as well about a life plan.
Yeah, Anthony, I was curious. Do you have a life plan to match your trading plan? And if so, how has it helped you in one or both?
When you say life plan, I guess, are you talking about what?
Just goals, you have in life, if you match them up with your trading plan, as far as goals in life?
I guess the question, so what you're asking is, does my life plan, am I setting goals based upon financial gains or profits from trading, or is it more or less, am I building my life around being a trader? I just want to make sure I
More
answer
the
this right.
second one you said.
Building your life
life
around being a trader.
Yeah.
Got it. Well, that's an important part of trading, because if you don't build your life around being a trader, you will never become a successful trader. I mean, that's just reality. I mean, there's a couple of guys I know. I mean, my one buddy, I won't mention his name because but he's the best researcher I know. I mean, he's fantastic. He's got 2 kids, but he's just like, I'm always picking his brain, seeing what he's thinking. I mean, the guy reads, you need to absorb so much stuff in, and he builds his life around, the times that he can do that, and how he's been really successful is that he just really dedicates blocks of his time, for somebody who's got a very busy life outside of it, to just, he is a research-based trader who then goes to the charts. And so like when news comes out, he's really very much a news trader. So like this environment he loves, because with the Fed and all that stuff, so he really digs deep into it. And so he builds a huge part of his time outside of being at the screen in his life to reading and understanding, macroeconomics, understanding cycles and things that, I'm more of a theme guy. Like, what's the theme? And I kind of go from there, more or less of a data guy. And I look to myself and I say, because I'm a theme guy, so I should identify what that means, is that I look at every environment as a theme. What is the theme right now? If I asked everybody in here and I said to you guys, what is the theme? You'd say, well, the Fed's raising rates. That is the only thing that matters, right? I mean, obviously, how far they go, are we going into a recession? We kind of understand what is the major things. We don't need to be a macroeconomist to understand this, but we do understand the basics of what's happening. So for me, as a trader, I build my lifestyle around, okay, how much time do I have to commit to being in tune with the theme and understanding it? And how much time do I need to spend at the screen to execute properly? And then how much time do I have to have away, kind of going back to what Valerie had talked about. So when I talk about building my life plan, it really is about what is the theme? How do I best go about executing it? And then how do I also have that amount of time away? So like right now, I don't need to read too much about what the theme is. So I'm really kind of like, okay, I'm really fixed on right now that we're in a bear market. I don't need to spend a ton of time reading. I'm probably reading for about 20 to 30 minutes a morning. This morning I also listen to one podcast, and I've kind of like got an idea of what the macro guys are thinking of the theme and how much it shifted off this rally. And I can trade the rest of the day. And when I'm done, like from here, I'll go work out and do whatever. My day is done. So I make sure that I'm spending a lot more time right now. I'm actually spending more time away. It's summer months as well, to be able to enjoy life. And I don't need to be totally ingrained in it. You go back to COVID time or the beginning of this year, I built a lot of my time around like understanding what's happening, what rates in previous times. And, I looked at, we go from QE to QT. It's like I was very bearish at the beginning of the year, because of that. So once I kind of got that grasp, I was spending a lot more screen time. So I had to adjust it. So I guess in a roundabout way, I would say it's always an adjustment. Sometimes I need to be here more. Sometimes I don't need to be here as much. So I do try and make sure, and I also know where I'm at as a person too. If I'm just sitting here and I'm just not getting the results I want, like basically like right now, I need to spend more time away from the screen, because that means that my time is not being rewarded here. So then I look and say, I need to leave. So I recognize that. That's the best way I can describe it.
That's almost opposite though, what you just said about what you think. You think, if you're not being rewarded for your time, that, well, maybe I should sit in front of my computer more and do more analyzing of charts and do more blah, 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 where sometimes getting away from the charts and saying, okay, it's not working right now. Let's not sit here and keep banging our head on the wall.
I've said this in your group before. Is it me? Is it the market? Is the environment?
Yep.
Okay. Right now, the market is doing what I think it would do. So it's not that. It's not my strategy.
Yeah.
The theme has not changed much. I mean, the theme is Fed's raising interest rates. There's other things going on in the news that I don't think are really impacting it. The Ukraine war, I think everyone's kind of settled in with it. It's things that are happening with Crudele and the commodity side of things. You can kind of look at it if you step back and you could visually see it. So I understand the theme of what's happening. Like I said, I'm not some macro guy. So I know that the problem is me. So therefore, if I know the problem is me, then it's time away that I'm just like, I'm too right now trying to be in every single position and trying to maximize it. So my lifestyle will change. If all of a sudden I'm like just trading really clean and good and I'm looking around and I'm like, what's going on? Then maybe I need to start spending more time on that. But you do have to have balance. And I think for me, it will always depend on the environment. Is it me or is it my strategy?
Got it. Wow.
Nice.
And Titus, I'm going to ask the question to Crudele that you may be thinking about fibs and levels. We're working with some Fibonacci numbers, and I've got a chart here. And if this is okay with you, Titus, if we ask this question, I want to ask
Titus, did I answer your question? Hopefully I did.
You did, Anthony. One of the things I kind of struggle with is I spend a lot of time researching things, and it starts to affect my, day-to-day life where I can't find that, middle ground. I spend too much sometimes in the market, and I'm just trying to figure out how to make a life plan to match my trading plan.
Well, I'm glad that I mentioned my buddy then, because he is that type of person. And the only reason I even mentioned him is because I know how much time he puts into reading. Like, I'm not someone who needs that. I'm somebody I'm not a data-driven trader. So like if the CPI number comes out hotter, I look to the macro guys and say, what are they saying about it? And then I look at the overall theme of the market. What does it mean for interest rates? And I'm more of the guy who like looks at it and says, well, this probably means they're going to raise more or they're not, or whatever the situation is. I don't need to know the details of the number. So like for me, I keep things very much like in a theme. So I don't know if that's even sometimes maybe a better route for someone like you. Maybe you're searching too much for answers that you don't need to be. And maybe you are really good at what you're doing in the theme, and maybe you need to refine how you execute a theme.
That sounds good. I like that ending.
I like it.
Thank you.
So do you want to ask him about the fibs, Titus? And
what
kind
exactly
of his
do you
thoughts?
want me to ask him?
Well, we're looking at Fibonacci numbers and levels and using the high from the year and the low from the year and trying to build some levels. And we do build our levels based on support and resistance. But what we're starting to see is some Fibonacci's that are lining up with the levels that we're actually building based on support and resistance of where price has been. Do you think there is any correlation with the Fibonacci? Because obviously the algos have to attach to some mathematical equation, right? They have to. I mean, you can't just I'll just throw it out there. So what's your opinion on the fibs and maybe the algos attaching to fibs and using those? Is that a thing? I guess would be my question.
Well, of course it's a thing, because they change all the time. And sometimes the fibs are they're hot.
Yeah.
A good trader is somebody who recognizes that that's what they're onto. I mean, that's the one thing about the algos is that the algo is attached to something. There's, a friend of mine has a company where you basically go in and you can bring your algo in and it trades for other people, right? It's called LODs. They're called letters of direction. And, you can bring your algo in and you can sell it and other people can just participate in it. And I go and I look at a lot of what the reports are and how a lot of them are doing. I used to invest in a lot of these because sometimes these guys get really hot, and I would just put money into them and when they start shitting the bed, I dump them, so, but that's my point, is that there's actually a trade there, because sometimes I'll look at these guys and they'll be like, well, this guy is just a pure trend trader. Like, he just draws trends. And, when you go back in like bull markets, there's times where it's like, you can't even believe how long a trend line lasts. And the algo just gets there and it goes burping, you're off. Like, there's no way it's going to hold the third time. No, come on. And then 5, 6, 7 times later, and it goes. And those algos are just on it because the human mind doesn't believe that something like that can last that long. It's no different than anything, right? Fibs, moving averages. There's times where they're really relevant. There's times where they're not. So I would say this is that everything works sometimes.
Nothing works all the time.
Works all the time. So if it's working, if you go back in your back testing and there's an environment that you see, first of all, identify the environment, right, Titus? When you go back, market's identifying a low right now. It's trying to, right? So you come off of the end tail of a bear market where you have everything looking like this, and then you have this consolidation and it attempts at lows. So a lot of times fibs will work really well when the market thinks a low is in or a high is in. because the fibs now are good retracements to maintain trend. It's a different way of looking at trend. So whether it's a moving average or a trend line, a fib, ultimately it's still determining trend. 3-8 back, 50 back, 6-1-8 back. How far is it going back in trend to continue to hold? So I think you have to look at the environment and how it's reacting.
Yeah, we are using them a little different. Maybe we can go into that some other time when you're here and show you as we refine it. I've actually set the Fibonacci retracement on the daily, and then we've moved it down in time frame. So it's a little different than using it for a retracement, but the market's extremely accurate the way it runs it. So I've been testing it that way.
Yeah.
If that makes any sense.
Yeah, I know. I understand what you're saying. Yeah. Yeah. I mean, I think it goes back to what I said earlier. When I think Travis asked me the question, about the coach. I mean, look at what you're doing here. It's how you see the market.
Mm-hmm.
There are no right answers. I mean, it's not like you could say that this is the way it's going to be. I mean, I should say there's no wrong answers, but either way, there's no right answers either. Like it comes down to how you see it and how you execute it in the environments that work well. I mean, that's really all. That's what this business is. It doesn't matter what the strategy is, but if you get onto something that's working, then stick with it.
Thank you.
Awesome. Perry, who had to leave, had a question. He's been trading for a couple of years now, off and on, and about we use candlesticks. I know you use more of the bars. What's your what do you think about wicks versus bodies when you're looking at candlesticks? Because it's always, do I take it from the wick? Do I take it from the body? How would you define those?
I used to use them.
Mm-hmm.
It's why I don't use them anymore. And the reason why I don't is because it makes me think too much about what happened within the bar. I would much rather see like a volume profile within the bar, which I will look at. Mm-hmm. To me, the only bars that matter on bodies are longer term charts. A daily, weekly. It was a good close last week. I mean, I wouldn't be surprised if the Bulls close this week positive again. I mean, how do you manage that intraday? I mean, when I look at a 3-minute, a 5-minute, a 30-minute, yeah. I mean, I'll go as far back as an hourly to where I think that they matter in terms of time frame. To me, the hourly would be the shortest term because for a wick, because the hour really represents a lot. So the hour is actually very important. And going back to my days in the pit, I learned this is because a majority of the orders that we would see come in would come in on hourly closes, and opens and closes. So if you look at the end of the hour and you look at the opening of the day and the closing of the day, a lot of times those are orders that have to be done. And an order that has to be done is a lot more, has a greater impact for a day trader than an order that doesn't have to be done. Meaning that if I'm short or I'm long and I have to cover or I have to add, a broker has to do something, most of the time that order is going to come in at the market. So an order that doesn't need to be filled are just limit orders. I mean, so those orders don't have as much of an impact. That's why a lot of volume profile and a lot of cumulative delta, which I look at as well, people will look at that and say, well, those are people that have to do something. They're going to the market. It's an aggressive order. So a lot of order flow traders almost only look at that. So if you look at it from that perspective, a lot of those orders happen at the opening of bars, at the closing of bars. That's why the wicks matter. They matter in that context. But in a short term, unless you're really scalping, I wouldn't look at it under an hourly. That's just my perspective. But I think that ultimately price is what matters the most. So if it's highs and lows in the bar, if I'm doing something of measurement, I will look at it from highs to lows, not from wicks.
Got it.
Just my thought.
Okay. Perry will love that. So I put my chart back up. Sorry, I got booted there for a second. I live up here in the Northern California in the mountains, and once in a while my internet. And you know, I was looking at your what you had posted on your Bollingers, and you know, getting past that 50% mark on the high and the low, that we could be in for a trend change. And holy mackerel, dude, look at this, 50% got past our 50, and look what happened. Kept going up. So now, with that being said, do I adjust my Bollingers now? Not adjust my Bollingers, but do I take my fib tool and do I move it? And do I have a new high and a new low now that our Bollinger has exceeded recent, right?
What time frame are we looking at right here?
We're at an hour on an hour chart.
Okay, so the only time I use the 50%, well, it would be like, look at it on the daily. Can you pull up a daily for me?
Oh, yeah. So there's a daily.
I don't see it. There it is.
Over. My screen took over because Rob dropped out. You want me to stop sharing?
Yeah. Well, yeah.
I was
Yeah.
gonna say this is a different screen. I'm like, I'm not sure what I'm looking at.
Yeah. Here's the daily.
Okay, so here we go.
Yeah.
So where's the 50% line now from that peak to that peak? Because that's going to come in today. Actually,
See,
I would
I
be
thought-
doing my,
I thought you had on your I thought you had on that thing, on that video that you had out, you did it on an hour chart.
I do it on an hourly, but the daily is what determines the trend.
Gotcha.
So I'll use the daily as intraday. So there you go. I mean,
So we're right there, aren't we?
we're
Getting
right there.
close. Getting close.
I'll pull that up for NASDAQ.
Okay.
Yeah, so that's not daily in NASDAQ.
Yeah, let me go to a daily.
Okay.
There's
I
a
see.
daily.
Yeah.
And this is on the MNQ.
Is that a 20 period 3 standard deviation Bollinger Band? That looks like a 2 to me.
Yep.
I see. Exactly.
So 3,
And make it 20.
20.
Now that's how it looks.
Ah, yeah. So now
So
I
now
would
look
take
at
it.
NASDAQ. It's about to close today. You could see, I mean,
I take it from here to here then, huh?
yeah, here to there. It's not totally closed yet, but
Yeah.
yeah, I mean, what is it? So 12 roughly.
12, yeah.
What's the low today? It's pretty much right there, isn't it? I don't think it got much
for
lower.
today. Yeah, the low is 12.23.
Yeah, there you go.
Yeah.
So if they start to close above there, I mean, I feel like they could really, the squeezes start to come in.
Sure.
You know, if it stays below this 50% over the next couple of days, and I mean, we can come back down to, I use my 30% would be 1140. But, you know, I mean, this is where the art side comes into everything. The artist part of the trader. But yeah, that 50% is big to me, because if you go back this year and look at any one of those peaks, they can't get above any of the 50%.
Yeah, you're right.
So
yeah, you could look at any of these.
None of them. They can't.
None of them. In fact, you could even go back to here.
Yeah, I mean, those
That
are
one
just,
too.
they just keep failing at them. So, you know, and we're back above that low. We're two things I look at in this market environment right now. We're back above the high of the Fed day, and we're back above the low. If the Fed day, I think, was the 17th. There it is.
Yeah, right there.
No, maybe it was the 15th. It was the 15th. The 17th was the week, the end of the week. So where's the 15th? There it is.
15th would be right there, that green candle.
Yeah, so that day was big because we made the low the next day after the Fed, and since then we've come back, and that's really, to me, and that is probably going to come in somewhere around that 30%. I mean, it could make a really good case for the market to keep going up here, at least in the short term. It's hard for me to make a case for it to go back down now, but it doesn't mean it can't happen. But
so our resident, one of our resident engineers, Randy, who you know, he's got some pretty neat stuff that he works on. He had a question about a mean reversion trade. So, and he's really into the mean reversion and the Bollingers, and he absolutely loves the stuff that you do with Bollingers. So Randy, you want to jump in here? And
yeah. Hi, Anthony. Great.
What's up, Randy?
Talk to you, man. Whenever I'm listening to you, because it's being inside my own, and I mean, for better or for worse, it seems like our thoughts are just, you know, it's like, yeah, I've got the same issues. So I love being able to ask a question to you, because you've got the experience I don't have. And so you know, what to do. You get kind of the street smarts, you know, like Rob
Yeah.
said. I'm really good at the details. I'm also a long term, but I have to kind of create boundaries for myself to see that longer action, and then watch, you know, all the little different wiggles and stuff like Pax likes to talk about in the price
Yeah.
action. So, and like you, I've really learned to love the Bollinger. And, you know, I've watched your videos on the beacon indicator and mean reversion trades. So I've been watching, and so I basically switched between the 5-minute, the 15-minute, and the 60-minute to get an idea of how the price action's behaving inside of the 2 Sigma Bollinger Bands. So I've been looking to it for 2 strategies. And one is a mean reversion trade, and the other is a trend continuation trade. So mean reversion trades take advantage of when the price is moving from one of the 2 Sigma bands back to the middle, or even across to the other 2 Sigma. You know, it really gets, you start seeing that momentum. And this occurs most often when the market's flat or at the end of a long directional run. So when the market starts chopping, it's a good way to, if you just have to be in a trade, and for better or for worse, that's the way I tend to be. I'm trying to cut back, you know, cut out those mistakes like Rob was saying. And then the other is when the trend continuation, you start seeing it making continual breakouts in the direction. It keeps pushing that Bollinger, that direction, and then it's staying above or below the 10 and the 20 moving average. Like Friday, it did that going up on the 5-minute and even on the 60 and stuff like that. It just was not. It was not going to go across to the other side. And so long really was basically the only direction. So what I'm trying to do is refine some triggers to keep myself out of the mess and not say, oh, is this the one? Is this the one? And to help me recognize the potential scenario, like you said, get the lay of the land, and then almost literally force me into the trade, especially, you know, on a breakout. You see it, you know, coming back to test an area, and then you see the breakout where price characterization starts, you know, it's been pulling back, and then it pauses, and then you start seeing it breaking the levels that it made on the way down. So do you have things that you've created as triggers in your own trading that helps you to recognize the scenario, and most importantly, prevent you from getting into the chop by reacting too early or too late? And, you know, it seems like we both kind of have some of the same thing as like, okay, I see it, I got to get in it. And then it's like, yeah, I saw it, but it was too early. Or, oh man, I wish I'd have seen that, and now it's too late.
First, Rob, how are you drawn on there on the Ninja chart? I've never seen that on the platform.
Epic Pen, epic-pen.com, $20 for the pro version.
Also,
So I can use a variety of things here. What's that?
It's an add-on.
Is an add-on, yeah. Yeah, it's an add-on.
Epic Pen. Okay.
Yeah, Epic
Not
dash
associated
pen.
with Ninja Trader.
Yeah, it's
What's
not
that?
associated. It's not associated with Ninja. I do, you know, I mean, I have the annotate tool, but I found that I can erase stuff real quick, and it's super easy to use. So I think what Randy too is also saying is, you know, he does a lot with the Bollingers and 2-to-2 crosses is what we call them, right? To where the price comes down to the Bollinger, kind of, we see a little bit of a turnaround, and the mean reversion trade would be that it goes back to the middle, right?
Yeah, use it as a key area and say, oh man, this is the turn. Where is it going? It goes back to the 10, goes back to the middle.
Yep, goes back to the middle. And then the same thing at the top going short. Now, typically you want to try and do it with the trend would be the best way. So I think he's trying to look for some, you know, some guidance in terms of using these Bollingers to help him with his entries and his, and you know, his triggers to get into trades.
My biggest issue with mean reversion trades is that if you're going with the trend, let's just say, okay, so first of all, what would determine the trend? Right? I mean, is the trend determined from the open of the day? Is it determined from the daily? Is it a combination of the two? So that's the first thing I would ask. The second thing I would say is, you know, mean reversion trades are the trades where you get the least amount of profits. So a mean reversion trade is only really for the hardcore scalper. And it's the guy who just keeps taking that trade and doesn't really look for confirmations as much, because that's one of those things where it's like, if it doesn't start to mean revert off that trigger, it's just not a good trade. So it's for the very, very active trader. And it's, I look at it as it's the hardest way to make money, because you're trying to go against what is happening. So it doesn't matter. I mean, unless your trend is to the downside overall and then confirmed on the intraday, and you're only taking short days and a downtrend, right? And in multiple downtrend situations, a daily and intraday, and you're getting that to me is you're at least going with the move that's happening. Because a mean reversion trade, just think about it. What it means is that you're going against what is happening. I live my whole life as a trader trying to go with what is happening.
Right.
Be dumb, follow price.
Right.
Yeah.
Yeah. And that's kind of what I'm searching for is, and again, like you say, with the larger trends, that's why I look at the 60 to get the bigger lay of the land and say, okay, so now I'm looking for it to come to the middle or to the other side to get the position to then take advantage to where it's not just a mean reversion trade, it's a means of getting in at a position that then can be extended as the price continues.
Here's what I would say to you. Okay. If I'm going to be a mean reversion trader, the only way that I'm going to look at a mean reversion trade let me do it from not even my perspective. Let me do it to how I would say would be the best way to become a better mean reversion trader, is to do something that is, and the trades are going to be so rare now, like is cut out the two-sided, focus on a one side, meaning that you really are only looking on the one side mean reversion trade using this type of tool, not a two-way. Because the two-way mean reversion day is so difficult unless it's a total chop day, which those do happen quite often. I'm not gonna say they don't, but that trigger could be you're waiting too long, I think, for not a good trade scenario. So I don't know how to put this in just like in a light way of saying that mean reversion trading is just really only meant for the scalper. It's only meant for the scalper who's trying to take the quick buck always, who is just like really low commission rate person who's up there. It gets in there overbought or oversold that according to what they're thinking, because that's what they're saying for that moment. And they're looking for the quick click. That to me is the hardest way to make money, because you need an immediate result. You have no bend with it, because if you go and it starts to go a little bit more your way and it's not, it doesn't revert back right away. And I know I see the circles that Rob has, and they did work today relatively well, then you just don't have a trade. So now you're waiting again, and it could be half a day before you get another one.
Right.
Now the whole time, the middle was the better way to trade, right? Going off of the middle, looking for the trend to continue. I just think it's a tough strategy. The reason why I use Bollinger Bands is to determine what the condition of the current trend is. Because a Bollinger Band, when it comes in, it just tells you that it's exhausted of expanding volatility. So on whatever period that you're looking at it on, whatever standard deviation, it's reached that exhaustion to where it thinks that volatility will decrease. That to me is only an indication of this trend may be done, but it's not an indication of to be short on reversion back into that trend, unless that trend is confirmed on multiple timeframes.
Okay, and that's what I'm looking for, is that, and that's why I'm looking at the different time frames, so that, and I loved when you were talking about the hour candles, because that's what I was starting to see was that, and I didn't realize that we've kind of gotten the idea that there are times a day when traders have to trade, like at the end of the day and stuff like that. We actually have a
Opening bell, yeah.
Yeah, opening bell and closing bell. We've got some trades that we've been testing on that. And I
Think about
started
this
seeing too on hours, you know, you would see that. So that's, I like to combine that with an hour and say, okay, which direction is this candle heading based upon that? And then see if that's going to be confirmed with the trend that's going on and so forth, to get into a longer term trade.
Two things I want to say about this. Number one is, if you can't program it to see what your money trade would be, then one trade that you absolutely should take every time, then you don't really have a clean strategy. Doesn't mean you don't have a good one, but you don't have one that's clean to where like you have that one money look, your money trade. The second thing is, if you're looking for more activity, then you have to reduce your time frame down, because what you should be doing is then take your Bollinger Bands, instead of 23, go to 22 or even 21. And then you have your anchored VWAP off the high of the, or off the opening range. And if it's below, the price action is below it, and the trend's coming down with Bollinger Bands that are tight, you might want to be more active to give yourself more opportunities by trading the tops of the Bollinger Bands, versus a wider Bollinger Band time frame or wider Bollinger Band deviation or period is really going to be so much harder, because it took a while for the market to get there, and the Bollinger Band is slowly coming in. Like, it's just, maybe put up, I think, to see it, see what this Bollinger Band is here. Is this a 22 or 23? This is a 5 minute, so it's probably a 22. I think it is
2 and 20. Yeah.
Yeah, that's what I thought. So do a 21 and go to like a 3 minute chart, or go to a 1 minute chart. No, a 20 and 1. You'll see what I mean by this.
Yeah, one sigma. That's what it's talking about. I got it.
So now go to a 1 minute chart though.
Well, I gotta see how many days I've loaded. I have diamonds on here. Yeah, it's only 5 days. We're good. Our proprietary turnaround signal, FNL diamond, 3 candlestick turnaround. Okay, there you go.
Okay. So that's probably a little bit too tight. So let's go to a 22 then on a 1 minute.
What'd you say? 22?
No, a 20 and a 2. Sorry.
Yeah.
22.
Yeah, the
Yeah.
Bollingers are kind of like a dynamic channel in some ways.
That's what I'm saying.
Yeah,
So you
there
might
it
even
goes,
have
yeah.
to go to like 20 and 1.5 or something like that, because you know you could do decimals.
Yeah.
I'm pretty sure you can on Ninja. I'm not sure 100%, but I think you probably can. No, 1.5.
Wait, you want 105? Come on, man.
Let's see if that works on Ninja. It
There you
does.
go.
Okay.
It does. Yeah.
So my point is, this is what you look for in these situations. Like if I'm a mean reversion trader, this to me, I mean, I think this is too tight, but maybe you even go to a 2 minute chart. I'm trying to find something that looks, but this is where you'd have to go, in my opinion, for this to be a viable strategy. Wow, it still stays below it that much, huh? Okay, but look at the violations of it on the first bar. But so that maybe if you have a bar close or the bar is just touching it, you're getting these reversions back. And the reason why I wanted to show you this is because, from my perspective, when you're doing mean reversion, it has to be tighter, because on a 5 minute or a 60 minute, that could just go. There's just no way to. It's so hard to manage risk to where that trade is a viable trade over time, because the market, it took work to get there. So I don't like to sell things that are overbought. I like to buy things that are overbought.
Because you want to trade with the herd.
Yeah, because most times people are going to lose by being short in an overbought. They're going to lose by being long in oversold conditions.
You're trying to predict the market's going to drop. Yeah.
I mean, if you go back and look at the last 3 months, anybody who's been buying bottoms on oversold days, or oversold conditions, is getting killed.
Wrecked.
Yeah.
So my strategy, I don't want to be on the opposite side of the momentum. I want to be with the momentum. So if I'm counter trend trading, so like, for example, if I think the trend is down, I'm only going to take the pop-ups to my tighter Bollinger Band for a quick mean reversion, because at least there I have overall trend with me. So I'm scalping with the trend. I don't take any of the buys, none. You know, or I mean, unless you are bullish. You know what I'm saying?
Yeah.
I'm trying to make this in a way to where I'm trying to, you know, mean
Right, and
reversion.
that's it. Yeah, I see the momentum, and I'm going. I want to be in a trade in the direction of the momentum, not what I think the price is going to do.
Yeah, you got to use a mean reversion trade as what Titus is talking about for a fib. Right? So he's saying I maybe want to buy a fib on a pullback and a trend I think is now turning bullish, right? You don't want to be buying, you don't want to be in a downtrend and it gets above 382 by like half a day and then you're long. I mean, if anything, you're selling it. You know, you're trying to stay with the trend. I mean, I think mentally, that's where I would build my strategy around if I wanted to be active in that sense, because it's going to keep me on the side of the bigger volume, the bigger momentum. So my number of right versus wrong, right, is going to be in my favor in this environment. I mean, taking both sides in this environment, I just don't see. I mean, anyone can do anything. I personally wouldn't touch a strategy like that.
It's tough.
I would not be trading two sides of the market. I trade one side of the market every day, because if I'm bullish, I'm going to lose long or I'm done. There's no way on a day where I want to be long, all of a sudden I'm getting short. I'm just not doing it to do it. That's
what I want to hear. It's not what I want to hear, but it's what I want to hear.
You know, because that's the day where you're just like, oh my God, I'm just getting destroyed now. And I'm just going to keep getting clicked out on an uptrend day.
Yeah.
You know, you've got to pick a side and, you know, or you widen up and you say you were only going to pick one side, because don't give yourself susceptible to, you know, momentum going too long in one direction or being susceptible to a momentum shift. You know, you're basically taking the odds out of your favor on both rotations.
Yeah. Okay.
That's
yeah.
great.
I like that. Yeah. I like the idea. I like that concept of, okay, if I'm going to get stopped out, and I will get stopped out on trades, let me do it trading the direction I should be trading.
Yeah. Cool.
You know, and I can learn to deal with that.
We got about 10 minutes left. I know Bernie has got a question about, it's kind of a FOMO question, but hey, Bernie, you there?
And real quick,
Rob,
we get Bernie there, I just want to say, Randy, you know, I'm just got to be honest with you about it, you know, and it's like, I don't have all the answers, and I wouldn't say that I'm right on this or wrong on this. I don't know, but I just want to say that, you know, when someone asks me a question, I'm giving it from my perspective and what I've seen.
Well, that's what I want.
I'm not saying that you're wrong in your path. I just think that what you need to do ultimately is just tighten it up and give yourself that really cleaner, better look, that you just have to really confident in that one look that's just like, I feel pretty good about being able to take it. Because to me, in that strategy, the final thing is like, it's very hard to position size there. You're basically only the same position size all the time, because that look is just like, it's a 50-50 look every time. It's never like, oh, I have a better look here than I did the other one. It's just the same look. So that's why I say that is like, you can't build an edge in that type of strategy. So I just wanted to say that.
Cool.
Yeah, got it.
All right, Bernie.
Good morning, Anthony. Please bear with me because I'm both kind of nervous and excited to speak with you. I don't get on the mic very much. I'm a new member here at FNL. So I've prepared some notes, which I'll reference now. And I'd like to get through some pleasantries or butt kissing first before I get to my question. Here we go. It's an honor to speak to you, and very awesome for you to take the time to visit with an aspiring trader such as myself. I really appreciate all the hard work you do and many hours you put in to deliver the content you provide for the advancement of the trading community. I've only recently begun to follow your work, as I just joined FNL last month, but Rob here has been recommending that I listen to you for over a year at least. I guess in case I'm a case of you can lead a horse to water, but you can't make him drink. But I intend to make an honest effort to follow your content from here on out. With that being said, here's my question, I guess. And here we go. Assuming the market catches you off guard due to surprise economic numbers or an unexpected Fed rate change, and you miss an entry to an obviously parabolic move, do you have a strategy for hopping in on the price action?
That could also be opening bell, right? So you think it's going to go up, you have a setup, you miss your setup, the price takes off, you can't figure out where else. Is there a setup that you might want to look for to get in one of those parabolic moves?
First off, Bernie, that's so kind of you. I'm humbled by your note, and I'm really grateful, and so I appreciate that. To answer your question, so the simplest way I would go about any sort of move that was, and you use the word obvious, right? And I will say this to you. Things as they're happening are never as obvious as to what the outcome would be, right? So it's like in the midst of that happening, even for me, if I see something where I'm like, they're going to happen after this Fed announcement, they're going there, right? It seems that way, but it's in reality, the market is in such a chaotic moment that there's no really true way to manage something to that destination, because it's not about the destination, it's about the path to the destination. So I would say, if I wanted to participate, if you said to me, I want to participate in this, there's a couple things that I would say you'd have to know beforehand. Number one is the news truly that impactful that it will carry us to the destination? Because a lot of times the market news may not necessarily be important enough to take us to that obvious wide VAR target. The market just may be reacting because it's positioned that way to the news, and the news really is just a trigger of volume. The second thing I would look at is say, once I have that clear, then I would say, can I get in here and lean on any area that I absolutely know if it gets back there, I can't keep it anymore? And what size of a position can I have to even withstand that? So I can participate in anything. There's a lot of times I'll step in and I'll participate in a move that's already what I would consider underway. That's basically what you're saying is a move is underway. It's already happened. It's already happening and it's going to that direction. Like if you would have said this morning, opening range was the high, and you talked about trading, we talked about trading 38.95. That move is underway. Right? Well, at what point can I participate in that trade and to be right, to be able to make money? And going back to what Rob said, it doesn't have to be news driven. If you look at today, look how wide the opening range was. It was pretty big. When can I start getting short to get to 38.95? So I think news is very tricky because there's people out there that'll look at that news. And I said before, we said you have theme traders, you have macro data driven traders. And the data driven traders are always going to look at that news and say, is that news impactful enough? And if it is, it may get there. But it's still not as obvious as I would think that you think it is my point.
All right. Well, thanks for your answer.
Cool. We got a few minutes left. Is there anybody else that wants to jump on the mic that has a question? I was going to get into crypto a little bit, but oh my gosh, what is going on in the crypto world?
Yeah, I don't have any crypto right now. I dumped all my ETH a while ago. I dumped all my horses a while ago. I have no.
Oh, we still have a stable. We're not racing. I mean, yeah. Madeline's racing hers. There's a few people racing still, but yeah, I've pretty much gotten out of it too. More out of necessity at the end of last year.
You need a magic decoder ring to decode the crypto.
Man, it's just not looking good.
The problem is that whether we're in a recession or not, that's, I understand that there's a technical answer to that. But when you look at what's happening, you have inflation, you have a slowdown, whether it's recession or not, I don't know. Crypto is only built on momentum. It's only built on the extra money people have.
That's
so
exactly
when I started seeing the signs that crypto was starting to fail, I dumped all my ETH, I dumped all my horses, and I said, I'm just going. I just hit the bid because I'm like, either I get out now or I have to go through this long drawdown or downturn that I'm not prepared for. So you just put money to work in other ways. But there will be a time and place for it again. I mean, sure. NFTs aren't dead. Crypto is not dead. But you're in a time where this environment does not support extra money being put into Ethereum.
That's what I'm looking at. The exact same thing is that there's just people just don't have that extra money now that they had before to put it into crypto.
Yeah.
And so we're like, saying, hey, just hold off, keep your powder dry. Maybe we'll get down here to a level to where you're comfortable, to where you can get back in. Cause that could be what we're seeing. We could see it get better. I'm not going to put a number on it. But if you have faith in crypto, there might be a spot to get back in and see another pump here. But I don't know when that's going to be. Heck.
Yeah, I don't either.
I mean, with everything that's gone on with stable coins and DeFi, it's like, oh my gosh,
yeah,
brutal. But you know what though? There were red flags when DeFi is telling me I can get 21% APR. I mean, really? Who's got 21% to pay somebody?
Yeah, and the thing is,
it's kind of a red flag to me.
Yeah. Well, that's why, I mean, I know we're not going to talk about crypto today, but I would always use a MetaMask, something like that, because you actually keep your coins, versus, I mean, I wouldn't even use exchanges anymore. I'd be perfectly honest with you. I have no confidence in Coinbase anymore.
Why?
I mean, Coinbase to me, I struggle to think that they have everything under control right now. I feel like there's a scramble in there that we may not know about yet. I mean,
yeah, I don't think there's any exchange in the US that I would even FTX, right? Oh, and Binance. I mean, they're kind of buying everything up right now, trying to be the number 1 and 2 exchanges in the world.
I agree. It worries me. I don't have any money in any of them. I'm out.
Yeah. Yeah. So, well, right on, brother. I appreciate you coming in, man, and sharing your knowledge with us. I mean, you wouldn't believe how much inspiration you help our traders, and the videos that we play every week and the live stream, and just the alpha knowledge that, we don't have, just because, we're newer traders, even though some of us have been doing it 5-6 years. We've never really, or more, we've never really been around people that are successful traders. We've just kind of had to test things and see what worked and really find our way. And having you come in and helping us out, man, dude, you would not believe how much it helps us. So we thank you for that, dude.
Yeah, I'm humbled by you guys, and I appreciate it. The thing is, I learned stuff coming into your room too. I think you look at it, every trader's journey is that you got to be able to be willing to always learn from other people. So when I come in here, I always look at it as, what are you guys seeing? What are you looking at? What questions are you asking? They make me actually question where I'm at in my own mind and in my journey. So it's I'm very appreciative, and and
if you think about it, if we're asking these questions, just a bunch of ham and egg or average traders there's probably other people that are thinking the same type of stuff. Because I would say there's probably more people in our boat than there are people in your boat in terms of getting to that certain level, and you're at that level, and there's probably more people like us, retail traders, that love to trade. We love to trade, right? It's kind of like the poker world. There's not a lot of high stakes poker players, but there's a lot of low stakes and micro and mid stakes poker players, and we all want to achieve that, moving up in contracts, moving up in stakes and poker, all that. And how do we get there, So
so you'll like this week's show. Then we got Jared Tendler.
Yeah, Jared's awesome. Yeah,
and we have a professional poker player that trades at EdgeClear now. That's this week's live stream.
Oh, cool. Yeah,
we'll it's all about a poker player who became trader. I don't know him, so it's gonna be.
Do you remember his name?
I have it. Let's see. I just got introduced to him just online. So name is,
and there's quite a few folks that went from the
John Magnetta.
John Magnetta. Mm-hmm.
I don't know who he is.
Yeah, there's a lot of poker players that become traders, a lot, because they found that actually trading can be I don't want to say easier, but the swings in poker are so big. Oh my gosh. I mean, they're huge, and it's hard to be consistent in poker. But we appreciate you, Deli.
I appreciate you guys. Thank you so much again.
All right.
And I look forward to the next time. Everyone knows they can hit me up on Twitter.
Yeah, you guys follow him on Twitter.
Thank you.
Instagram, YouTube,
thank you so
obviously YouTube. We show this stuff every week. Don't be shy. If you have a question for him, he's great about DMs, man. I couldn't believe it when you replied to my DM a year ago, right? Like year and a half ago. Like,
I reply to all of them. I mean, I get a lot of spam, so sometimes I don't get to them right away, but I always I appreciate the question. someone asks me something.
And watch out for imposters, folks.
I
I
got
had
one.
somebody, one of our members, Bill Evans, said, Crudele just DM me asking for like 50,000 that he can get my return. I'm like, no, get there. That's not. Let's report him. That's not Anthony. I promise that's not him.
I have family members and friends that have come to me and been like, hey, even a CEO of a company that I work with in the industry was like, hey, Anthony, you recommended Bitcoin to me, and I was just wondering, and I'm sitting there reading the email, and I'm like, what are you talking about?
This is not me.
I'm like,
Not me.
no.
Yeah, there's scammers out there. So I want Hey, Travis, you're here?
Yes, sir.
I want you to kind of give the last word here as we sign off. All right. Travis is one of our best traders and moderators, and we absolutely love him to death. Man, I wish I knew as much as he did when I was 28 years old. Honestly, he's younger. He's probably the youngest guy in our group, but probably one of the most humble and talented too. So.
No, just reiterating a lot of what our members are saying in chat. Thanks for your time. Thanks for everything. We like seeing things from a different perspective. Talking to you about the coaching thing's really cool, because even helping other traders, obviously I'm not trying not to stand on a podium and still help somebody else without saying, hey, do this exactly like I do. So it's really cool to hear from somebody else who's been doing that for a while. And again, thank you.
Yeah, you're welcome. And, I look at all my coaches and all my mentors. The best thing they could ever do is listen. Because sometimes a trader will just talk themselves through it. They'll talk about their problems. They'll talk about all these different things, and they're almost answering their own questions. But no one can hear it from them, because most people outside of this industry, when you talk to them, they can't understand it. So a coach to me is a good mentor is always somebody who just listens and lets you talk. And sometimes you find those answers out for yourself.
There was a little bit of a follow-up question earlier. I never asked. We don't have to. I know it's closing comments, but I was just going to ask, were there certain hurdles that you see that every trader kind of goes over, and were there other hurdles in trading that are more style specific to something that you might deal with that others might not?
I just think that, getting to the point of trying to make money and trying to make money doing this as a living, I think is the biggest hurdle, because the pressure of trying to do this and pay bills and like trying to actually build a big career out of this. I mean, that hurdle I think is difficult for every trader that I've ever met, because we all go through the periods where we're like, wow, I can't believe I've done all this work. I've come this far and now I can't make any money. So the hurdle is sustaining success and building on it. I think is so much harder than achieving any sort of level of success, because anybody can make money for a period of time in this business, but very few can sustain it. And that's really, I think that's the hardest part. That's the biggest hurdle, I think. To this day, I struggle with it. There's going to be, beginning of the year was great. The last 2 months I've made no money. And you're like, wow, how's this happening? I'm just back and forth, and you're like, what do I have to do now? But that's the challenge of it. So
that's what keeps me coming back, right?
Right.
It's a challenge. If it was easy, I don't know if I'd do it, right? Honestly, well, maybe I would.
Yeah.
Awesome.
Well, perfect.
Thank you again.
Thanks again, Deli, and
right,
we'll be in touch. And again, we'll continue to promote you and all your channels. And thanks again.
All right, I saw everybody in chat. Thank you to everybody, Barbara, Brenda, Gary, Bernie, everybody in there. Thank you guys.
Perfect.
Have a great day. I'll see you.
Take care. Later, Deli.
Bye.